Alright guys, welcome back to NarXFS channel. Okay, so today guys, I'm going to be doing something on Great Britain pounds Japanese pair. That's Gbpjpy. So guys, before I go into this video, please, if you've not yet subscribed to my channel, please do so by clicking on the subscribe button. Then you can get more updates on my channel on how to do your analysis using ICT concepts. So guys, let's dive into the video. Today I'm going to be doing a top-down analysis on Gbpjpy, and I'm also going to be teaching you on how to counter trend. Alright guys, so this is Gbpjpy's chart. So I'm going to teach you guys on how to do your top-down analysis, what you need to do, and how to take an entry. Although today the market is not moving, but I'm going to be using this chart to teach you a top-down analysis on how to counter trade using your ICT strategy, how to counter trade the trend of the market. That's trading against the trend, guys. So this is 2 hours, and this is what we have, guys. Let me show you something here. So we have this to be the last low that was formed, and you see how price created this higher high, higher low, higher high, guys. So this is like showing you a bullish formation. So before we even consider this, let us do something, guys. This is what I do on all my top down analysis. First of all, let us do the top down analysis. So the first thing I always do is to mark out the range of last week. So let me show you my previous separator so I can identify the range of last week. Okay guys, this is it here. So using the 2 hours time frame, we can see what happened throughout last week. So last week was actually a bullish week because this is where the candlestick for the week opened on Monday and it closed here. So last week was more like a bullish move. So I have this imbalance here where I think price want to fill in before going down more, but that's what I saw last week. So I've been looking at this point here. For those of you that watched my previous video, you know that I've been looking at this particular imbalance here. Here you can see how it's opened. So I feel like price is going to trade into here, but remember we are doing a top down analysis and we are also going to be counter trading because we want to take trades by Asian section on Monday. So this is what I will look at first here. I'll draw out the weekly lows and the weekly highs. So you can see here, this is the last place. It formed its low on Monday and it formed its high. This low was formed on Monday on this place here. So let me go again and draw the high of the week, which is here. It happened on Thursday. This is it here. This is Thursday, this is Friday. This was where it formed its high here. Okay. Now we've marked out our last week range. So now this is what we always want to look for within this range. Anytime price takes out liquidity outside this range, we want to short or long in the opposite direction. So if liquidity is taken out above the highs, let me take it out so you can get a clearer view. Previous separation out. So this is it. We have this range, guys. So if liquidity is taken above this range here, above this range now, above this high, we know that it has cleared out the previous week's high. So we expect a little drop after liquidity has been taken. Then if liquidity is taken below this low, we know it has taken previous week low. So we expect a little bit push before we can continue the trend. So it's the push we want to trade. That's what I'm talking about, the counter trading. So we want to trade the little push after the either weekly high or the weekly low have been swept. So this is what I'm looking for. Now let us draw out our point of interest, like our confluences on this particular chart here. Looking at this setup, guys, we know that this is a bullish setup where we have higher highs, higher highs, higher highs. So this is a higher high. Price actually broke structure here. Let me show you guys. Look at it, very neat here. If you zoom in very well, you see that that last high was taken. So this is a BOS, guys. You can see this is the last high. This is where the candlestick closed, forming the week high of the week on Thursday. Then this particular side was just a small move on Friday. So price did not trade that much on Friday. So if you want to counter trade, okay, before we go into counter trading, let us mark our point of interest using the current trend. Now this is the current trend. This is bullish trend already. We have a bearish trend on the daily, but this is market has started this bull run. So throughout last week we had a bullish move throughout last week. This is the whole last week data here, from here on Monday to here on Friday. So we expect price to continue its bullish move down to our POI here, which is a FVG here, this fair value gap here, where we have this other block. So we see price trying to push forward to fill in this particular gap, which is very obvious, guys. So now using this place as our point of interest on the bearish side, because we want to sell from this particular place. That's if we can buy to that's if we buy from here. If we buy down to here, we want to sell from here. So that's what I am expecting. But we cannot just start buying from here, guys. We cannot just start buying from here. Price will not just give you a buy setup right away down to this point. So price might want to correct one or two things down here, which I will talk about very soon. So please, guys, a reminder, please, if you're still watching, please, and you've not yet subscribed, please do well to subscribe before the end of the video. So guys, let us dive in down to this particular zone here. So what do you see here? Using ICT concept, we have a break of structure, we have another block here. So if you look at this particular place, let me zoom in. This is what happened here, guys. Watch me clearly. If you check here on the 4 hours, we might have a fair value gap here. Okay, this was an order block here on 4 hours here. The last sell candle and price, mitigated this order block, and we have here to be an imbalance on the 4 hours. We have here to be an imbalance, guys. So this is an imbalance, but let me take it down to the 2 hours so we can just use the 2 hours to see what we want to see, and we just have it to be a little bit visible on the 2 hours, guys. So this is the 2 hours, guys. On the 2 hours, this is what we have here. We have this order block here. Order block is the last sell candle close. Yeah, so this is the bullish order block. We have this last sell candle, the bullish candle, and this long impulsive candlestick. And see now, we have an imbalance, guys. Price came in, retraced a little, but is not yet filled. Look at this is the imbalance right from here down to here. So we have this imbalance, guys, and below here is the liquidity. So we have this place to be liquidity here. We have this place to be liquidity. Then we have here to be another block, guys. This is very, very interesting. On the 2 hours, it looks very, very neat and interesting. So liquidity plus order block plus a fair value gap is very, very interesting. And remember, guys, what is really making this thing more interesting is that we had a break of structure here to the upside, still telling us that we are on bullish move. So price will come react to this FVG here, this particular imbalance, and still drop down. Now that is our top down analysis. We know that on Monday or Tuesday we'll be buying from here. This is where we want to be buying from, down to, let me show you on the 4 hours time frame, down to this imbalance here. Then we want to sell down from here. If we get an opportunity, we want to sell down from this place to take out this particular low. Now we've done our top down analysis, guys. Back to analysis for counter trading. Now while you're doing your counter trading analysis, you use the last data to do it. So we are not using all this overall data now. We know that overall we are bullish here. So we want to do our counter trading analysis, how we are going to sell down to our POI. How do we want to sell down to take out this liquidity and come into this FVG? That's what I want to show you guys now. So let us go down to 5 minutes, or let's take it to 15 minutes first. Now if you watch here on the 15 minutes, this is what we have here: price, cost in market, change in character down to this point here. This is the last low and this is the last high here, guys, where we had a break of structure. Remember, this line is the line of break of structure on the higher time frame. So market has shifted below here, retraced, shifted. This is a break of structure, guys. So now what do you think is going to happen, guys? So I want to see price, let me show you using this fib level. Using this fib level, okay, let me draw it correctly. We have our discount, we have our premium level. Remember, while you're trading with your fib level, you're going to be selling from the premium zone and you'll be buying from the discount zone. So using this fib level, we want price to retrace down into the premium zone before we can start selling, guys. Don't ever forget this concept, so you don't do the wrong thing at the right time. So we know that price is not yet in the premium level, we are still in discount. Now how do we get a POI to start selling from? Let's look at what 1 hour have at this range now. So looking at this range here on the 1 hour, we have series of break of structure and we have an imbalance here, guys. So this is an imbalance here. You see this gap here. After the 1, 2, 3 candlestick movement, we have this low or the week and this other week. And between these 2 weeks, there are gaps here. So that's how you point out your FVG, guys. So we are going to draw out this FVG. So let's look at what this zone looks like on the 15 and the 30 minute. Then we know what we'll be doing here. So we go back to the 15 minute. Let's see what here looks like. So this is the 15 minute. Okay, that's what this place looks like here. Still looks more noisy on the 15 minutes. Let's take it down to the 5 minutes, guys. We just want to see if there's a particular area where we can stand, like another block or anything, to enter from this particular zone. Since here is the FVG, we want to look for more confluence on the lower time frame. So we go down to 5 minutes. What do we have here on the 5 minutes, guys? Okay, we still have more noisy chat. Of course, that's what we'll be expecting. But this is what I'm seeing on the 5 minutes now. This is what 5 minutes is showing here. Let me zoom it out so you can also see. Now, this is an inducement formed here. Okay, so this is more like a positive sign that price is going to bounce back from that place here. So you see here equal highs. This is one high. After this retracement, we have this high formed, another retracement, we have this high formed, and you see how price is going so on and so forth to form more liquidity before the imbalance. So we want to see price still ranging, then tap into this box here. That's the 1 hour FVG here. This is our zone. So we have liquidity on the lowest time frame. So let's check out for 1 minute. So this is the 1 minute time frame, guys. So you can see how visible the inducement or the liquidity is, guys. So we have that price retraced down from this high, retraced a little bit and retraced and consolidated around this place, still at this exact point here formed another high, and price has been building more liquidity within this range. So after building more liquidity, what do you expect, guys? We want to see price run into the liquidity, then bounce back from the 1 hour FVG, which I'll be taking my sell limit from. So this is where I'll be selling from. Now another thing we should be looking out for is I'm not going to take my entry at this exact opening of the Asian section. I'll also be looking for a change of character in the 1 minute. So guys, when do we have a change of character? That will be when price have gone into this FVG to fill up the imbalance. So it's inside this particular level here. I'll be looking for a change of character here around this zone, when price will definitely break structure, break this last high. I'm very sure, making this trade or making the trend bullish on the 1 minute. Then once we break this high, we will now have something formed like this. So if I should see something formed like this, I can now take my entry when I see something form like this around this particular zone. Now let me tell you why I can take my entry. The reason being that I will use here as the last low, then this particular point that is going to fill the imbalance at the last high. So when I have a change of character down here, I'll wait for a 50% retracement down using the fib range. Guys, I remember what I said. Using the fib range, let me delete this. Using the fib range, I'll wait for a retracement down here. Let me show you guys. So assuming this is a 50% here, so I'm going to be taking my sell trade in the premium level here. So I want to see price fill up this imbalance, then retrace down to the premium level, which I'll start selling from here. Guys. So let me take this out. So I will start selling from the premium range here on the 1 minute. So after I have a break of structure, guys, that's what I'll be doing. So that is how I've planned to take this particular setup after a change of character to the downside, because once the market open, we'll have a break of structure to the upside, which shows that we are bullish. Until we get a change of character downwards, I cannot start selling. So that's how I'll be counter trading this particular pair on Monday. So today is Sunday. I'll just have to wait for the market to open. Then I'll drop this setup for you guys. If you see your confirmation, you can also take it. And where do you want to have your stop loss? Above this point here. So if you take your trade here, you want to have your stop loss above. Your take profit will be at this liquidity here, this particular low here. So that's where your take profit will be. Then where do you want to have your stop loss? Above this point here, where we had a break of structure. But if you will be in the market, once you have your change of character, you can just place your stop loss above the high where that formed the change of character to the downside. Is more safe. So the next high you'll be seeing on the 1 hour, on the 1 minute here, in this zone here. So the last high you'll be seeing on the 1 hour in this particular area, in this particular zone here, will be where your stop loss will be. So imagine you have a shift like this happen. So you can just come in at the premium, place your limit at the premium, then your stop loss will be this high. Your stop loss is going to be that high. Then this is the 1 minute. Then you can now take your take profit down to the 15 minutes, down to the 15 minutes liquidity zone here. So that is it, guys. So I'll see you when everything has played out. So I'll still bring back feedback on this particular trade and analysis. So remember what I said, we are counter trading to where our point of entry or point of interest on the 4 hours and on the 2 hours. So we have here to be our point of interest on the 2 hours. We have this liquidity. Look at here, 2 hours, guys. Let me show you. We have here to be the liquidity, the last low here. Then we have here to be an order block, and between this order block we have this zone here, which is an imbalance every day, guys. So we want to see price come down from here. We are not disputing the fact that we are bullish on 4 hours or 2 hours, because we had price break this place, forming a bullish move here, or giving us a BOS to the upside. So we just want to counter trade from here down to our imbalance here. So that's where we have our take profit. So this is what we are looking at for entry around this imbalance on the 1 hour, then take profit around here. So we want to be risking like 5 pips to 22 pips. That's 1:4 risk to reward. So I still remain Narex FX, guys. Please, if you watch to the end of this video, that means you're really interested in learning more ICT concepts. Please do well to subscribe if you're not yet subscribed, and like and comment, and also share to your fellow traders who are interested in ICT concepts. So guys, thank you for watching and have a nice day.